much money or assets would a community bank have, I guess, just to put this in perspective? I'm trying to go through what you gave us. We just received it, so, you know, I'm trying to analyze what you just went through.
Community banks typically today are defined as those with less than $1 billion in assets. They make up about probably 90% of banks, and the banking system is about 6,000 banks, and the vast majority of those are small banks with less than $300 million in assets.
Do you feel that the federal legislation in any way after 2008 had anything to do with the community banks pulling back because of all of the restrictions they have? I mean, I understand, and I think we have agreement on this predatory lending market, but now you're going into, you know, the community banks, and, you know, I think that what we're hearing from them, and they weren't asked to testify today, is there's so many challenges that they have with over-regulation, they feel, that was passed several years ago. Do you think that that has something to do with, you know, fewer small business loans, as you show on your graph on page, it's the first graph that you pointed out. There's a lot of graphs in your handout, so thank you. It was the first graph that you showed us how after 2008, obviously the big banks were continuing to loan at a higher, for larger projects, but the small lending did not continue to rise. I mean, that particular graph, I don't know where it is in here.
Page 10.
Okay.
Certainly the community banks have been hit very hard by Dodd-Frank under legislation. It's imposed a lot of fixed costs on all banks, and those costs, of course, if you're a very small institution, your compliant costs are much higher. Another very important issue with respect to this is you have the regulated lenders like the banks, and then the unregulated online lenders. The banks are in mortal fear of being targeted by the Consumer Financial Protection Bureau and others should they make what are perceived as predatory loans. In my conversation, most community bankers won't make a loan at more than 12%, and most of them even less than that. Whereas these large online lenders are lending at 40, 50, 60, even 70%. So
I think we have agreement regarding that predatory lending area, but again, you're bringing in banks that are trying to do the right thing, that historically have been the person who is loaning out to the small businesses that are getting caught up at the federal level with federal regulation and have pulled back from lending as much locally, when we all know that they have these relationships that makes the most sense for them to continue, but they feel over-regulated, the costs are higher, the compliance costs. Do you feel that there's any need for a push at the federal level to free up some of the regulations for what we all agree would be the person that probably should be, you know, the bank that should be lending locally?
The community banks are disappearing. When I first started working at the Fed back in the late 80s, there were 15,000 commercial banks, and most of those were community banks. Now we're down to about 5,000 community banks. The community banks have just disappeared. Largely, they've been gobbled up by the big banks. The four largest banks had about 50% of the assets before the crisis, and they have about 70% today. We need more community banks. Regulations make it very hard to establish a new bank. They call them de novo banks. I think there was like no new commercial banks established in the last couple of years because the capital requirements and regulations have made it too difficult to create a new bank. So unless we take some action at the federal level to preserve our community banking system, I think we're going to continue to see this sort of consolidation and this pullback from the small businesses, which is going to leave this opening for alternative lenders such as the predatory lenders we're talking about today.
So in your presentation on this packet you gave us today, I mean, is that part of a recommendation as well to look at the federal level and look at the regulation for the community banks? Obviously, since you mentioned that there are less of them, which creates less lending locally, I mean, is that something, an avenue that you're willing to look at as well?
Certainly.
And I think, let me just add, I think part of the focus and the goal is not to put more regulations on the community banks, but to preserve their sustainability by putting requirements for transparency on those alternative options. We're really directed towards those predatory lenders, and I think most banks probably now adhere to some bill of borrowing rights, I would think, because they have to be regulated by the professional, the Office of Professional and Financial Regulations. So I think the goal here is to try to put some kind of restrictions on those predatory, those alternative, lenders out there.
Right, and I agree. I mean, sometimes the conversation is being pulled over to the community banks and the banks, and I just want to be very certain here what our goals are.
Yeah, and I've heard from the banks or the community bankers, and they're very pleased. I think this is something that can bring everybody to the table, because it benefits them, really.
Thank you.
Thank
It's really
you.
about a level playing field and
Yes.
transparency, and the regulations that are faced by the community banks and capital requirements, they're required to hold $8 in capital for every $100 of bank funds, that are not faced by these online lenders.
Yeah, thank you. So you did a wonderful presentation, and very professorial. It was very technical. But, we look forward to reading your paper, and thank you so much. And, Dr. Collins?
Thank you, Senator Collins.